Hello and welcome to Unfair Advantage, the podcast from Tin Man Capital. My name is Murli and I'm your host and the co-founder of the firm. This is a show about how technology impacts your industry and your everyday life and can put you ahead, all with a uniquely Southeast Asian point of view. We're recording in April 2025 and I'm speaking with my partner in crime at Tin Man Capital, Jeremy Tan. It's been a long time since we were in the studio.
Was it 2 years?
Something like that. And things have changed to say the least, right?
Yes.
So we'll discuss all of that and more. But before that, first, maybe you can introduce yourself to our listeners. And number two is, I asked you a question before the recording, and even I'm curious how you're going to answer, which is, please give us one fact about yourselves that none of our portfolio founders know.
For those who don't know or have not listened to any of the podcasts or read any of my posts, I was born and raised here in Singapore, right? At the age of 18, I wanted to get out of Singapore. A ticket to that was essentially getting into Cambridge in the UK. And, thankfully, with a UK government scholarship that enabled my trip there, and that changed my life. So I did chemical engineering, which I never used. Eventually pivoted to finance. I've been doing finance for the last 20 odd years across different capital structure, including private equity, commodities, distressed debt, and now venture capital. Chose Singapore instead of Hong Kong because I want to set up family. Now happily married, 2 kids, never regretted to move back to Singapore, and now having really a good time doing what I love and building a team that, I'm really proud of.
So what's one fact?
Well, give you two, perhaps.
Oh, bonus.
Yeah. One, at the age of 6, I swallowed a hairpin while watching Sesame Street, right? And I had a shock. My parents had a shock, right? It's one of those black hairpins. I was just playing in my mouth and then it just accidentally swallowed it. The doctor said that, initial diagnosis, I had to have the operation,
Right.
given it got lodged in between here, right?
And you could feel it, or?
I couldn't feel it. But thankfully, nature took its course and, it passed out. So that's one. And second, I guess when I was 13, 14, I had a pet chicken, a pet chick that I kept in the HDB flat that was producing eggs for us and so on. I'm sure I'm run foul of Singapore laws by keeping that.
Foul? Foul?
No puns intended. Becky passed away a few years later, but those are two things I don't think I ever discussed or ever spoken to anyone in a long, long time.
Let's talk about how B2B tech or enterprise tech has changed from when we started, which was back in 2017, 2018 to today. And as a quick overview, things change, but they also stay the same in many ways, right? I'm sure you remember back in 2017, 2018, AI was a buzzword. Crypto was a buzzword. ICOs, remember those, right?
Blockchains.
Exactly. And that was a different kind of AI from today, right? Yeah. So if I hugely oversimplify, it was about pattern matching and using the AI's results. Whereas today, people are mostly talking about generative AI and agents and so on, right? And on the crypto side, people today primarily mean cryptocurrencies.
Yeah.
Buzzwords like blockchain and NFTs have completely disappeared, right? ESG was a thing and still is, but now it's very much just about the E and not so much about the S and G, meaning climate primarily. The more things change, the more they stay the same as well. Where do you think we go from here in terms of technology?
When we started this, remember 7, 8 years ago, gauging from the expression and reaction from investors in particular, B2B investing as a mode of investing as a business model was very foreign to the group of people here, not so much in other parts of the world. And I think it's an unfamiliarity with the business model. I mean, overall, the venture market is just more nascent here. People are more focused on B2C investing, something that they could relate to and something they can bring up in a daily conversation like ride-hailing, e-commerce, and so on. I think that certainly had changed since then to now. I think it's been helped by a few factors. Number one, as the ecosystem mature and people get a better understanding and appreciation their different business models. Second, I think what we didn't see was COVID emphasizing the need and importance of digitization. And that's where B2B comes in. I think there are a few factors that we predicted came to pass as well, where the cost of labor going up as nation develop and increasingly the business leadership seeing tech as a way to be more efficient and an effective way to tackle the margin compression they're seeing. I think those combinations itself, and finally, I think the downturn that we last saw starting in 2021, 2022, highlighted some of the downsides of investing using power law and using growth at all cost, usually linked with a lot of unicorn hunting as well as B2C models. That helped people see what we've been telling people came true, obviously give us credibility. But unfortunately, I think that itself is not so much the importance of it, but rather is the context to which people view, okay, it's another way. Another way is needed to invest in this part of the world, to take part in a fast-growing but unique part of the world where it's fragmented and still nascent, right? Where the traditional VC models of investing and building companies may not work as well. So I think those are the factors causing constituents, including investors, governments, founders, to start viewing B2B as a credible, as a viable way to partake in the growth here. In terms of technology and so on, look, we always view this, right? It's an enabler to a business model.
Yeah.
Whether it's AI, whether it's blockchain, it comes in cycles, right?
Yeah.
So I always chuckle when people ask, hey, what do you think of this technology? At the end of the day, it's an enabler.
Yeah.
Let's just be very clear about that. I'm quite excited about what we're seeing, okay? As we mentioned earlier, I think the ecosystem is pretty nascent. Nascent in all regards. In one part is also capital markets, and it's generally shallower compared to deep markets like the US. I think with the onset of what we're seeing, AI, and the successful integration of AI into making work more efficient, either from building a product standpoint to serving a customer, so bringing more value with fewer people. I think that bodes well for the region here where, it's a nascent market, right? And I'm looking forward really to see how some of our founders are building on top of what other founders before them have come across, right? Let's not forget, it's a new market.
Yeah.
So those that have come forward, whether their success and failures have paved the path on what could or could not work. And I think through this cycle and reset, we can see that the founders are getting smarter, right? Investors are getting more sophisticated. I think that helps in terms of that learning. I think is now brought to the forefront, enabled by technology, like we're seeing, in developments of AI. I think that really helps. I think investing in VC in Southeast Asia come to the forefront.
Obviously, I agree with everything you said. Let me just...
You have no choice.
I have no choice at this point. I'm in too deep. But just want to add one other thing, which is that the thing that we've often discussed, consumer is often a winner-takes-all market, right?
Yeah.
Which means that capital can be a weapon if you can get it.
Yeah.
Right? Whereas the things that we are interested in, it's not winner-takes-all. You can build substantial businesses, create a lot of value for customers, employees, founders themselves, and eventually your investors as well, while not being beholden to capital markets to give you huge gushers of capital, right? The flip side of that obviously is that capital is not the only weapon. You need some capital, but you need to do a bunch of other stuff as well, which is, I guess, the value adding side of your business, right? And in that context, I think just so that our listeners know, I should say that obviously we are doubling our investment pace this year, right? We're closing 2 investments shortly, which is much faster than our typical pace. This doesn't mean we're doing 2 investments every month, right? We've never been that sort of investor. We've been careful. We want to be the right partners for the right people, but we are going to be investing a lot more this year. So let's shift slightly into a bit more detail on our investment thesis, right? Obviously, we've been focused from day on software startups from Southeast Asia serving traditional industries that are, as you said, digitizing. You came from the world of hard assets, not software, right? So why do you like software?
For the listeners, benefit of the listeners' and standpoint, when Murli talks about hard asset, we talk about essentially my experience most recently with a commodities firm where we invest in molecules, right? And the infrastructure like tankage and storage space to contain these molecules, whether in situ or also for transportation, right? So that is how physical it is. It must be made clear that there are very successful business models that are built on very asset-heavy investments and made a lot of money, right? And very profitable businesses. Previous firms that I've been in as well, right? But it's also through these experiences that I realized that there are opportunities in that space. So, for example, when I was working in Trafigura, each cargo or ship could be hundreds of millions of dollars of cargo because, of the commodities it carries and the volume it carries. And I was very surprised to see, how some of the ship operators, are keeping track using pen and paper, right? To pinpoint where the ships are in a vast. Then that started me being very curious, of the opportunity here. It's also the lens of how I can be an entrepreneur, right? Now, if I was born with a silver spoon, with a huge trust fund, with capital as my weapon, as you say, I wouldn't be looking so hard at software. But to play the hardware game, you need a lot of capital, right? And which I don't have, right? Like I said, there are opportunities in the space in Southeast Asia for what we just discussed. But at the same time, it doesn't need so much capital for us to succeed. It appeals to me as well, like you said, the it's not a winner takes all market, right? I think it comes from obviously the characteristics of software and B2B, where the contracts are long-term, recurring, allows you some predictability. And run correctly, and margins are quite high, right? I mean, anything from a blended IoT margins of 70% gross to 80, 90%. That in itself means that it's very capital efficient, allows you to plan your cash flow forward, and less beholden, like you said, to the capital markets. And that coupled together with obviously the whole digitization opportunity within the legacy, or what you said, boring but important industries in Southeast Asia, that really picked up my interest in this sector. The final nail, or what the final piece of puzzle that came together, is the fact that we have the skill sets to do this. Having been from the industry allows us a unique vantage point of understanding it from quote unquote an operator or ex-operator standpoint, to understand whether the solution addresses a real pain point and how much people pay for that. Knowing that we can do it, it's important, because B2B investing compared to B2C investing, you really need to understand the industry to be able to evaluate a solution. I think that's been vindicated by the fact that every time founders come to pitch us their idea, they often walked away saying, wow, this is very refreshing, because we don't really have to dumb down our pitch for you, right?
Maybe sometimes for me, but less for you.
I think it depends on which industry. You're being modest. I think that's the highest form of compliment, to be honest, right? But anyway, I've been coming full circle. Those are the reasons why I thought, there's an opportunity, the timing is right, and third, we have the ability to do it.
And, we thought of all these things back in 2017, 2018. I think it's been proved out that, and some areas we've actually had to tweak and refine slightly, but overall it's been proved out. But what's to me very refreshing and gives me a lot of optimism is that we've said Southeast Asia, and that's our focus, obviously. But some of our companies are going even further afield, right? Middle East, Australia, so on and so forth, where basically the same problems, same underlying problem statement, same economics at the customer side of it. So therefore, if I have an asset base as a customer, a balance sheet of $1 billion, $5 billion, and my typical return on assets is 4.5%, anyone who can help me push that up by 4.5 to 5% is making me a lot of money. I'm happy to share some of that with those companies, right? So I think that's another aspect that we evaluated, and over time we actually got comfortable with. Second is obviously you spend much more time with in the hard assets world than I did. But I was fortunate that although I've been in VC since 2008, as you know, many of our prior portfolio companies were focused on those kinds of companies as well. So whether it be telecom, heavy engineering, so on and so forth, where I came from the software angle, but had to by default understand those underlying industries. So that's useful. Something you said earlier about founders building on prior founders' experience, right? And this again, coming from the finance world, in the fund management industry, there's this acronym, OPM, other people's money. My version of OPM is other people's mistakes, right? So basically learn from other people's mistakes and don't make the same ones again. Make a new one if you need to, in the worst case, like go try an experiment, but don't repeat other people's mistakes, right? So another way of saying it is, I'm a big believer in Charlie Munger, Warren Buffett's partner who passed away. He had a concept called inversion. Essentially what that means is go find out what doesn't work then don't do that. Right? It sounds absurdly simple, but actually it really is a great way to think about it. Don't try to just shoot for this great destination and forget about the obstacles and mistakes you could possibly make, right? So on that note, you're a veteran of both like IPOs and M&As for the past many years, 20 years plus. What are the reasons, what are the errors and what are the factors that are in place here or are not in place here that we haven't had so many listings of VC-backed Southeast Asian companies? And we can even broaden that to acquisitions if you feel it's appropriate. I can throw out some ideas if that might help you. So one idea might be price. Either it's too high or too low. Another one could be maybe the underlying financials are not attractive, or fraud, or more generally unreliable data. Are people worried about that, right? Is the TAM not interesting? And you can define what TAM means. Lack of liquidity on institutional investors is sometimes thrown at me, but I want to know, but why, right? If this is interesting place, people will come. Is it regulatory problems? So I'm giving you several ideas. Pick whichever one you like or add some new ones.
I mean, I worked at the exchange before, as you know. I mean, the Chicago Mercantile Exchange, right? Often liquidity, it's a bit of a chicken egg issue. Yeah. Let's talk broadly about exits, and exits broadly, not just about IPO, but M&As, whether it's from a strategic or from a financial buyer standpoint. M&A is happening. We have kept a database of this, and it's taken a painstaking work from our associates to do that because the media doesn't report anything, less than $1 billion, right? I think that's one of the fallacies of operating this region, or maybe worldwide, where size matters. Actually, is returns, right? Multiples of returns. If a company is more efficient,
Exactly.
The size of the M&A to us is less interesting than the actual returns. But actually, if you look at it, the trend is trending up, right? Though some skeptics will say that, hey, it's low volume. Yeah, let's put it in context. This is a young market. 7-8 years ago, as we talked about earlier, the investing and focus on B2B wasn't there. And it takes time for companies to grow. The few top of the funnel have some failures, and then some companies come through, and it takes time for them to grow into a sizable size. Yeah. And acquisition takes place in a wide range, right? It could be 5-10 million earlier stage, where there's a buyer who say, look, I want to enter the market quickly, either because of a geographical interest or technology buy over, right? But then you could be in the range of 50 to 200. When you get to $1 billion, it becomes less because just not that many acquirers with the balance sheet be able to take it all, right? Okay, the bulk of the acquisition at this current state of development is 50 to 200 million, right? And you're capital efficient, we've done the math, 50, 200 million is life-changing money, not just for the founders, but also that the investors will make out quite handsomely as well.
And that's a very interesting point I just want to double click on and re-emphasize for everyone listening, right? If you're a founder or even an early employee who owns 2-3% of a company that got bought out potentially at $1 billion plus, first of all, the chance of that is very low, but let's say it does happen. The amount of money you're making there is small compared to if you owned, 20% of a company that got acquired at 250, 300, right? So focusing just on the top line number, it might maybe help you massage your ego or, tell your parents, look, I did this great thing. But if you want to really look at the bottom line, actually the latter might be better. Raise less money, run a good profitable business and find the right sets of acquirers. Get 5 of them in a room and fight, let them fight over your business and have the opportunity to buy your business.
We will see M&A accelerate when the mindset of local buyers changes. You still see a fair bit of mindset here that permeates through the organization, whether it's buying a software or buying a company, fold them into their operations. There's a mentality of, I'll do it myself.
Yeah.
Right. It's quite natural. We see the other markets as well. But we see that changing. So as you know, one of our portfolio companies that engaged with one of the large corporates for a long time before they decided that, look, we're going to do it ourselves, right? It was very disappointing. But a year later, they came back and said that, look, we tried, couldn't do it, right? So let's talk, right? So how many of this conversation do we need to have before it gets knocked into, it starts eroding some of the existing mindset of business owners that run sizable companies here, right? But we see it changing. I think the other elements that will push that is also increasingly, as we talk about when we started the firm 6-7 years ago, that we always thought that Southeast Asia is going to be a beneficiary of the US-China tension, which makes it a neutral ground, high growth, will attract capital. So you're seeing not just the Japanese and Koreans who have always been interested in this region, the Chinese increasingly as well, and prompted by the lack of growth in their own home market, but then they're not very welcome in the Western Hemisphere. So Southeast Asia is a natural choice, right? I think that creates a nice little tension for assets here. There's now, I think the difference here is there's now a desire to move quickly, right? To capture the growth. So the calculus moved from building yourself, and trust me, you see many of these attempts that has not gone well. Trying to build a company from scratch by these big companies have come from large singular market, and they failed to take into account how unique this region is across the borders and the nuances that's very different in operating in markets like Singapore, Malaysia, Indonesia.
In my previous role, when I first started in venture capital, as you know, I was covering India, Southeast Asia, and ANZ. And I used to often joke, but every joke has a kernel of truth, that what happens in Southeast Asia happened in India 5 years ago, give or take.
Yeah.
SaaS is a big development in India and has been for the past 10 plus years.
Yeah.
Right? There have been companies of substantial scale that have been built out, several acquisitions. And on the flip side, actually, so they are, the exits are there. But on the flip side also, there's been acquirers who are Indian acquirers buying companies as well, right? Now, obviously, that's also going to be another source of potential, exits for entrepreneurs here. But in addition, I think it's also a case of them teaching acquirers here, look, here's how it's done, right? So I think that's a very welcome development. I think that's only going to accelerate. In the past, Indian companies were primarily focused on the US. They've realized that actually there's a place just on their doorstep here that they can actually do business in, and many of them are coming. We have had, as you know, but this is more for the audience, investors who have come into our fund from North Asia, but also now increasingly India, who are saying, look, this is a massive opportunity that's relatively underpenetrated. I have very little allocation to it, and that's why I need to be there. And guess what? All those investors are corporate, right? Or family-owned businesses, industrial businesses.
The locally born corporates in Southeast Asia is going to feel that, my God, they're facing threats, competition coming from all these other regions, and they have to wake up.
Wake up your idea.
Yeah. To the idea that someone is coming to eat their lunch.
Yes.
Yeah. And I think that coincides with a generation of leadership that's taking over the businesses, people around our age, right? Who are now taking over from their grandparents or their parents, who rightfully so want to prove something, inject new life into an existing steady Eddie business, or just prevent from being disrupted altogether.
Yeah.
So I think that bodes well in terms of pushing people to start thinking, look, do I need to approach this with a slightly different view? Do I need to drop all mindsets and preconceived notions that have helped and served me well before, and that may no longer be relevant and maybe a stumbling block going forward? Let's talk about IPO. I think it's fair to say that there isn't a regional exchange in Southeast Asia that has got the liquidity, and by extension, then the kind of multiples they will see for tech companies, right, that you see in the US. Why is that the case? I think it's a function of many factors, right? In my previous firm, I was involved in listing one of our subsidiary, of which we considered Singapore Exchange and London Exchange as options for us listing. I have to say that at least back then, which is several years ago now, the rules are much harsher here, and that could be. And I understand the need for that because you want to protect the investors and so on. Question is it using a hammer to attack a fly,
Yeah, no, and for that matter, you may have all the harsh rules, but still stuff happens, right?
Still
We,
happens.
we won't talk about names here, but
Yeah.
there have been complaints about people not following the rules, and then nothing happens. There's no consequence.
Yeah.
Yeah.
And I think having harsher rules I think we can agree on, doesn't guarantee there are no frauds.
Correct.
Right? Yeah.
Yeah.
I think there's a real cost, however, to having too harsh rules, because it kills the liquidity and the interest of companies coming here. Because this is not the only exchange; there are competitors around the world, right? I think that's one big element of that. And as much developments we have in the financial industry in Singapore and this part of the world, I feel that the focus of liquidity provided by fund managers, whether it's hedge fund, long only funds, it hasn't been targeted at the stocks that are listed in Singapore.
And why is that?
For a few reasons, right? There isn't much action here. Action defined as interesting stock where they can extract either beta or alpha.
So this is the chicken and egg you were talking about earlier.
Correct. I mean, the mainstay of the stocks here, it's banks and real estates, REITs and so on, pretty stable, eddy and so on, right?
Yeah.
Shipping stocks, for example, right?
Yeah.
Or wholesalers, right? Which, you don't expect much volatility. It's basically a dividend game, right? And you're going to attract certain type of investors. And by and large, a lot of the investors, they are focused in, at least in Singapore, it's retail.
Some of this is true for, let's say, Japan as well, right? So, and Japan has suddenly become very hot. Folks like Elliott are going there, activist investors and so on. And Japan is actually less receptive to, litigious actions by investors. It's less receptive to even shareholder pressure. And yet it's happening more there. Whereas here, courts are quite happy to hear any case, right? With merit. So with those same elements, is it simply the fact that Japan is so much larger, or they've suddenly come out of the deflation trap? Like, what's the difference you would see?
For Japan, there are definitely much larger companies. Yeah. And probably more innovative companies coming out, right?
Right.
Compared to what we see in Singapore, right? Or Southeast Asia. I think that plays a part. Size does matter, right? Because, you can't ignore Japan, because I'm sure some of the Japanese companies are in some form of index. I don't know, whether it's Morgan Stanley, Asia Index, right?
Yeah.
Because of the sheer size of it, they have to include them. And that, I think, for our viewers' benefit, means that long-only funds who are indexed to that fund will have to allocate some. They're in creating liquidity, right? So I think all that plays a part, right? Create innovation and also just simply the size of it.
Now, shifting gears, we have a partnership with Seeds Capital, which is part of the Singapore government.
Yeah.
Can you briefly tell us about that and how it actually helps founders?
When we first started, we sort of missed the boat, right? With the first couple of tenders. I'm not couple of tenders, but rather they have selected their managers and we just basically missed the boat. But we started doing, Seeds has been extremely helpful from a standpoint of helping grow the ecosystem and supporting well-deserving companies. So whilst we are not as part of their approved partners, we've done a few co-investments together in several companies, right? I think it's been tremendously helpful because during COVID, which is just a black swan event, they have stepped in rightfully so, not just to support some of our companies, but also other companies in this region. We have thankfully been selected and last year as one of their co-investors, approved co-investors. What it means is that they can match dollar for dollar for investments that we make. Tremendously helpful for the founders, right? Because we can speak for a larger check for them. So for a standpoint of raising a round, it saves the founders effort to try to get up other investors so that they could make their round. Having someone as useful and credible like the Singapore government on their cap table definitely helps. And also for future round, it doesn't just stop there, right? The seeds has more capital to deploy. Obviously, if the company proves itself, and all that is very, very helpful in a very nascent, well, not nascent, it's in a capital markets in VC that's developing, right?
Yeah. I think I'm a big fan of seeds, right? We know so many people that they're all lovely people, very sharp, very responsive. They're an example for me of how, what kind of partners we like to work with. There are many others who are much quieter that we've worked with. People from multinationals who are interested in innovation. Some of them are our LPs, people from local corporates, so on and so forth. I just wanted to highlight that other, multinationals or regional companies who want to come and work alongside us in many of these portfolio companies, very welcome. The same applies to policymakers. We've engaged with folks around the region. It's not just Singapore, although this is our backyard, as well as operators who know what it means to grow companies. You don't have to be a sort of a big company to come and work with us. You can be an individual who's worked in big companies or small companies and taken them large, any of those. And of course, finally, investors looking to back Southeast Asian startups, get in touch. I'll finish. That was the ad section of the podcast. So you and I talked with policymakers a lot, in private, but also we made public statements about governments in the region should think about tech startups, right? In fact, you wrote a piece about this just a few days ago on LinkedIn. So let's, rather than rehash that, people can see it on your LinkedIn. Let's get it further into the depths there, right? What happens when companies fail? How should governments react? Should they care about it?
In particular, in this part of the world, Singapore, people attribute too much of a negative barrier and feeling with failure, right? And then it comes from, I guess, our history where the narrative that we are a tiny little island with no resources and we cannot afford to fail and so on. And I can understand why our forefathers have built that narrative and it's necessary at that point in time. And then obviously that comes with another side of the coin, which is a negative obsession about failure.
Have you seen the same obsession in other countries in the region?
I think less so, right? In Malaysia, less so. The business community there, they've built their business in spite of the luxury of a platform that someone in Singapore would benefit from, right? Government, stable currency, business-friendly policies, influx of foreign capital coming to the region, to their country, right? That's stacked against them. And I think for them, the only path is forward.
Right.
There's no bridge. There's no safety net. I don't think a lot of them got to their where they are through various iterations of failures. We should view failure as a stepping stone towards a creation and innovation as progress going forward versus frown upon and something that people should avoid at all costs. I think that is crippling to entrepreneurship, crippling to innovation, and crippling to a vibrant society we're trying to build here.
In my opinion, I think there's two lessons I take away. One is that I think, what kind of failure is it, right? If someone, actually went and cheated people, I mean, they deserve to not just fail, but they deserve to have action taken against them.
Correct.
Right? So leaving those aside, I think all the other stuff, I agree with you. In addition, what I would say is it's actually useful to not quite go so far as to say, look, this person's such a great failure, therefore they're great. No, you don't say that.
No.
But you give them a soft landing, right? I wrote a blog post years ago about a company who had a white knight come in and buy the business when it was clearly running out of cash very quickly, right? They didn't do it because they were being charitable. For them also, it made business sense. But it's useful to celebrate those occasions when they happen. It'll attract more buyers in the future. It'll also tell entrepreneurs and investors, etc., try it, give it a shot. If it doesn't work out, it's not like the whole world has come to an end. There is still life after that, right?
I certainly agree with you. So I was very irritated, I think, that the height of the recent VC boom, this unhealthy obsession with unicorns. It's made worse by media writing about it. That creates an expectation among founders that if I'm not a unicorn, I'm a failure, right? It's so limiting.
Yes.
It creates this unhealthy obsession with that. And we said earlier, the fact that unicorn doesn't mean it's a good investment.
That's right.
That's just purely from a financial standpoint. But what about from an impact standpoint? Have you created a product that has materially changed the quality of life for society, the place you operate, for the people around you?
Yeah,
right?
it also incentivizes people to have bad behavior, cutting corners or even outright fraud, so on and so forth.
Yeah, entrepreneurship as a vehicle entry point towards creating a more vibrant society comes in different shapes and form. It may be a social enterprise startup, non-profit startup, all the way to a very large company that eventually gets bought out and get listed. We need to celebrate and let the entrepreneurs, and by extension, a rich stack, an array of and deep market of investors that have set up their fund to support the success of these companies, to eventually, I think, have a shot at creating the impact and the contribution towards a vibrant ecosystem and society. And if we don't bring it to our everyday conversation and give the entrepreneurs the permission, and even investors, to think differently, to have the audacity to try something different, to have the courage to be able to break away from model that has worked in the US or India to craft something that works specifically for our region, then I think we would have failed.
And then more practically as well, each individual market in our region is relatively small, right? So for example, Bangkok has roughly 25% of the entire country's population. Pretty similar things apply to other countries in the region, where you might actually say Bangkok, KL, Singapore, Jakarta, few of the other cities rather, have more in common than Bangkok has with Phuket, or Chiang Mai maybe less so, right, etc.
Yeah.
Given the market is relatively small and there's also similarities at the higher level, should governments in the region really compete, or should we take a more coordinated approach, a bit more like China has done, or to a lesser extent the EU?
I'm very disappointed that there isn't as much coordination, collaboration that happens within the various governments and ruling parties within this region, right? Let's take the problem at the onset, right? Yes, I think part of it is learning that the TAM is still developing, right? The total addressable market. Quite often it falls quite dramatically outside of the capital cities. No choice, this is what we're dealt with, right? But it doesn't mean that this will not change in the future, and it will change. In the meantime, we have to play with what we've been dealt with and what's the best way to do that. I'm a big believer that a stronger Southeast Asia is better for the world. Look at what happened when China became strong, when US sneezes, particularly post GFC, the world was buffered by China, right? And similarly, a Southeast Asia that is more independent, has its own ecosystem, will be a better contributor as a global citizen. And I feel like some of our efforts here are not within each region, within each country, within Southeast Asia. It's very inward looking that I need to develop my own market. So each government will say, look, I will invest in your fund if you invest in a certain number of startups in my country, and so on and so forth. We can understand why they do that. But it would be a bit of force feed, right? Because the reality is that, unfortunately, the stage of development of VC and companies are very different across the region. Right? With Singapore probably taking the lead on that. And I'm not saying that because I'm Singaporean, we're here. It's just the fact, right?
Yeah.
But together as a region, there's much more we can do together. So like, our neighbors, Malaysia, Thailand, and so on, the market is so much larger.
Yeah.
Right. And there are ways that we can collaborate whereby Singapore can be the capital center for VC, but then facilitate market adoption and customer adoption through this region. I think that would be the optimal path in terms of developing this whole region as a whole, and getting us to the point where, as a region, we are more self-sustaining compared to the rest of the world. So I'd really like to see that, and encourage, actually, a few conversations I've had at a working level. There's a great desire to do that. Perhaps that is where we can make
small difference.
Yeah, that's right. Yeah.
So I gave you two alternatives, and you clearly picked one: compete or coordinate. There's actually a third alternative, which is just focus on large companies and building out the infrastructure. Let startups, sort themselves out, right? Which has generally been the approach that's been taken in the US. right? And many other places, but US is more successful. US has never really put money into startups. Universities have and other people have, but not the government itself. Is that viable here?
No. Sorry, I know you told me to pause before each question and answer, but no.
If you had to do a plug for one investor in Southeast Asia that you admire, who would that be? Can be an LP, can be a corporate, can be another venture investor, angel, anybody really.
It comes to mind. It's essentially Oppenheimer. Yeah, we are their first investments in Southeast Asia. To my knowledge, the first only manager they re-up in Southeast Asia. I think they bring across
Re-up meaning they invested in our second fund.
the second fund. Yeah, and Eduardo and his team and obviously their backers have come with a commitment that they're going to invest and help not just extract value from this region, but to help this region grow.
Yeah.
And through that, create impact here. And they understand it's a multi-year process, right? And the way they build up their team demonstrates their commitment and a desire to continue to with that mission. And they have been great partners to us. And true to their words, they have expanded their not just fund investments, but also direct investments in this part of the world. As individuals, they also contributed to the ecosystem here, be it through their work in the Wealth Management Institute, to being generally available to talk about their views at forums that moves the needle.
Our journey as Tin Men, as a firm, what are you most proud of in our journey so far?
Many things, and not in any particular order. One thing I'm really proud that we built a firm with a culture that we're really proud of. I think that's one of the things that we said we will do at the onset. We're not going to we want to create something different from large companies, just a place where people can do good work and be the best version of themselves. I think that we have successfully done that. People are generally happily coming to work, and they feel a sense of ownership. I mean, I'm not talking about just the fact that they have carry. Everyone has carry, right? But a sense of their day-to-day actions reflect that this is their firm, not your firm, right? And as a result, you get good work and people are happy. And I think, it gives me great joy to see each of them grow day by day, right? I think there's very few things that beats that joy around that.
Yeah, a great example of that is just this morning, one of our colleagues had emailed me and a couple of others saying, I need this stuff urgently. And she sent out the email at 6:30 in the morning. By 7:15, another person had immediately taken that picked up that ball and said, okay, here are the things that I've done already. Here are the other things I'm going to seek information, but here I need some clarification. It was that quick, right? No one told either of them that this is something that you must do or I'm going to yell at you. None of that, right? It's all self.
That's exactly what I'm talking about, right? This automatic machinery that gets propelled, empowered by a sense of pride and mission. The other part that I'm proud of is of the work we're doing externally, right? Be it through the LinkedIn's and the content we put out and so on. Whether it's podcasts, it's in events we speak at. I think what's common there is the commitment to speak our mind. I think when we first started this whole B2B investing, a whole deviation from the power law, it was met with skeptics and so on, right?
Yeah.
I think with this reset, we've proven to be right on many things. But it's not so much about being right that gives me joy. It's the fact that we have, by that, provided a permission and a platform for people, whether it's founders and investors, to be audacious, to be courageous, to do something that may not be accepted by the
conventional wisdom,
conventional wisdom, and to push the boundaries, right, and not just accept something that worked in the US and copy and paste here. I think that has got many more legs to run, and I'm excited to see how it inspires new leadership and young blood to come up.
So that was the things that you're most proud of. What do you regret?
I think the first few years of of Tin Man, we were very inwardly focused. I mean, they have reasons for that, right? You want to build the systems, you want to get it right, raise money, and so on and so forth. But imagine if we actually were more vocal with our content and outward engagement in events and so on earlier. We've seen, I think, some remarkable contributions from our content and impact. Imagine if we started earlier, right? I'm not sure it's possible given the volume of work that we had, but that's something that I think about every now and then. Yeah.
Yeah. No, in fact, I have something very similar. It was not just about doing the content earlier. I regret not starting the firm earlier. Genuinely not for money-making reasons. I don't think we would have actually made that much money given how much harder the hill would have been to climb, right?
Yeah.
But more for, again, going back to OPM, could we have helped, to a small extent, prevent some of the errors of the ecosystem that had happened, cut them off before they actually became larger errors and so on? I don't claim that either of us has all the answers, but we have a point of view that often differs from other people, and occasionally that's all a founder needs to hear. Wait, hang on a second, do I really need to do it this way? So I regret not starting it earlier just for that reason alone. Like, we could have had a perhaps much healthier ecosystem, not just Singapore, but all around the region. If only we had started earlier and other people had joined us and done the same thing.
Yeah, agree.
What is one thing you believe about company building that most others would disagree with?
If you want to embark on an entrepreneurial path, you should just focus on that, right? At the expense of everything else. Don't even start a family. Kids are a distraction and so on and so forth, right? I don't believe in that. Okay. Now, I got a caveat by saying that I made the same mistake where instead of building a firm, I built my career, right? I had kids relatively late. It makes more sense for me to focus, so I make more money, I'll be more comfortable, I'll be ready to have raise the kids, all these reasons, right? From my standpoint, with hindsight, actually, the amount of money you can make has a higher beta, or a multiplier, the more senior you get in your career. So that's when actually you want your kids to have grown up, right? Versus in the beginning where you're an analyst or something, yes, you may outperform because you focus on your work, but the multiplier is just not so great. So why fight that curve? I think somewhat similar here, but very different reasons. You either decide you want a family or not, right? And you got to accept that if you want a family, entrepreneurship and career is just one part of your life, one part of your happiness. And why delay that? There are many plus points as well when it comes to setting up a family early on. You don't want to be too old, so to speak, when your kids are growing up. Be it, having the energy to take them to play whatever sports they want to play and so on and so forth. And being there for them as they're growing up and also enjoying their life journey, right? Whether they get married or have kids and so on and so forth, you want to be there for them. So there's one element. And second, I do think that, having parents, being parents make you overall a better person. I always like to draw this parallel, right? For us, it's a people's business. Dealing with founders is there's a lot of parallels with dealing with kids, right? We tried.
Careful what you say here.
Yeah. Well, I'm not saying founders are kids, but you hear me out here, right? If you try getting a 5-year-old to eat vegetables, negotiation at its highest. I guess with time, I began to realize that dealing with founders, I cannot force them and I can't bring them to the water. It's up to them to drink it. I can't force it upon them. I can only accept the idea. I can only be there when I know they are running to a brick wall. Not because I'm a saint or something, but we've done this many times and we know this is going to happen. But to pick them up and not tell them that I told you so. That's one parallel that I took from parenting itself. You can't tell them what to do. You have to accept the idea and be there with them through the journey. I find that being a parent has helped me become a better investor. I think from a founder standpoint, at some point you can be managing people and talent. The same skill set will come in too, right? It's like you're managing yourself, right? Good luck trying to tell them what to do.
That's great. Yeah, I always say I think it's best to not try to tell people what to do, but occasionally you can tell them what not to do, and it's up to them to listen or not. And the flip side of this is, I think, listening is a skill that is very, very underrated and very valuable. Correct. Hearing what the other person has to say is also something that we can all do, whether it would be founders or with children or with anyone else.
Right.
So on that note, let's leave it there. Thank you so much for joining me on this episode.
Thanks, Murli.
Tune in again for the next episode of Unfair Advantage from Tin Man Capital. Thanks for listening. Tin Man Capital also organizes events and shares other resources for founders and investors and everyone else in the community. To stay in the loop, follow our company LinkedIn page or go to www.tinman.asia for more information. And remember, if you like this episode, tell your friends. If you didn't like it, tell your enemies.